In our Discovery series, an impressive recovery in the previous few quarters prompted us to look at Sirca Paints, a small-sized wood paints manufacturer with a market cap of just under 1,000 crores. Incorporated in 2006, Sirca Paints India (SPIL) engages in manufacturing, sales and exports of wood coatings and other decorative paints. The company is a market leader in North India and features among the top 3 premium wood coatings brands across the country. SPIL has an exclusive tie-up with Sirca SPA and holds exclusive manufacturing and distribution rights of Sirca products in India, Nepal, Bangladesh and Sri Lanka. In May 2018, SPIL raised capital through IPO for setting up domestic manufacturing units. In November 2019, it commissioned a manufacturing facility for nitrocellulose, melamine, economical PU products and PU thinner at Sonipat. In 2018-19, SPIL was growing at a healthy rate of 15 to 20%. However, the onset of COVID and subsequent lockdowns adversely impacted the business performance in the first half of 2020. Apart from this, the business suffered a major setback in June 2020 due to a fire accident at its factory. The damage from this was restricted to the loss of raw materials and shed structures. The worst is behind as the company has already received 10 crores against the insurance claim and has resumed commercial production in the recent months. In the last decade, India has emerged as one of the largest markets for wood coatings products in the Asia-Pacific region. The size of the wooden coatings market is pegged around 7,000 crores and is expected to grow at a healthy rate as furniture industry remains the key driver of wood coating products. SPIL generates a revenue of 150 to 160 crores, of which 85 to 90% comes from imported Italian PU products. The business has high growth potential as the Sonipat manufacturing facility can generate around 200 crore revenue at peak capacity utilization. Besides, the company has also commissioned wall paint manufacturing unit with an annual capacity of 24 lakh litres. Exports remain a key growth area as SPIL has just started shipping products to Nepal. Meanwhile, the management is planning to expand its market presence in Sri Lanka and Bangladesh over the next 3 to 4 quarters. The company is an existing supplier to IKEA's contract manufacturers in India and has recently entered into exclusive distribution agreement with Italian company San Marco Group and Durand and Vivan, who are leading European manufacturer of adhesives, for the distribution of their flagship products. Demand momentum in April-May was impacted by COVID's second wave. Moreover, the margins in Q1 FY22 were adversely impacted by inflation in raw materials and sharp spike in freight costs. Recovery has commenced from June and the company is looking to add new dealers and increase spends on marketing to strengthen its domestic footprint. In the last 3-4 months, the company has already undertaken successive price hikes to offset cost headwinds and expects the operating margins to stabilize around 22 to 23%. The management has set itself an ambitious growth target of 30% plus growth over the next 3 to 5 years. The cash conversion is weak, but the management is working extensively on improving its working capital cycle. Sirca's growth story appears interesting, but the track record is patchy and consistency in execution remains key. The stock has been range-bound for the last 8-9 months and is inexpensive relative to its peers. There exists ample scope for capital appreciation as majority of the paint companies' stocks trade at exorbitant valuations. If the management executes well, the market will eventually reward it with a multiple much higher than the current levels.